business finances are in check and aligned, but also your personal finances. And if you know this, like you do, and other business owners know too, like your business is a reflection of your personal life. So as you're showing up and being kind and generous and financially sound and things like that.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
And this is where my next question goes. So what message do you have for the entrepreneurs really listening? It's not about disempower them, but it's about to give them a reality check that what it's gonna take, if that makes sense.
Yeah. So, and the best part is I can completely answer your question just with my experience, because I believe it's the best way to go about it, because I learned from a bunch of people with it, both in the real estate and the tech sense, which is why I followed a lot of their steps. Mentors are guides, or they give maps, right? But they aren't necessarily, we should follow them step by step. So, take this for how this is for you. But simply my path was this. I went into real estate. I learned a lot about real estate. I was a commercial real estate broker. I then went into tech. I co-founded a software company. We raised, a bunch of funds. We ended up selling the company. And I continued on, with tech for the next kind of 7 years, right? Just like you shared in my summary. Now, how this matters is this. It is extremely challenging, I believe, to be an entrepreneur in tech, to constantly imagine just like a chisel and ice and just like constantly hitting ice, right? For, I don't know, 10 hours a day, right? For 2 years, right? Like that's a very
I
mentally
agree with you. I agree with you.
Yeah, right? Like that sounds terrible. Like I don't even want to do that, right? Now, the reason why that matters is because ultimately, as an entrepreneur, I will vary on myself, my ability, maybe the market, my product. Like I will be very optimistic and I will be extremely pessimistic, right? I'll go through this example of a fish climbing a tree. It's a great way to describe, what I'm saying. But in summation, it's to say, if I go and get the tech salary, right, to build software in some way, or learn how other people are building it, something like that, right? Like get a good salary, buy some kind of property. I ended up renting out the rooms in the property to other people. And guess what happened, Harry? I didn't have to pay for me to live, right? So I ultimately had $2,000 a month that I was saving. And then what I started to do is, I started to use that to like buy more real estate. But as a software person, right, or someone building a tech company, I could what? I could use those, say, $2,000 a month to then maybe hire a developer, right? Now, granted, I wouldn't do that. That's something we'll talk about in one of the other questions. But it's the ability of like, I could maybe hire someone to help me, maybe an executive assistant or maybe a marketing person or something, right? Like I have some funds, I have infinite funds to basically be my own venture capitalist, my own investor, right? Like if I go spend 6 months, $2,000 a month and nothing happens, well, guess what? I'm really not out anything, right? I just learned a lot. I spent money. I got to change the way I work, things like that. Real estate's an incredibly powerful tool. There's also depreciation. There's appreciation. There's all these benefits, if you will, with real estate that ultimately gives you kind of a level one foundation in terms of your finances. So that way, as you continue to build things like tech, which are very unknown, it could work out very well, very quickly, or it could take forever. It really gives you that ability to kind of flirt with that. So
Yeah. Paul, and I want to ask you a question because we are with the entrepreneurs, we when it comes to business, sometimes we are not aware of the risk. And I always talk about our share this with our listeners, that sometimes we have this conception that we have a business, let's say a restaurant, and then this business is making money, and then we take all this money and we reinvest in this business to grow, and then we take all this money and we reinvest in this business to grow. Whether another way of doing this that would be more, in my opinion, more efficient way to do it is that if
yeah,
your business is making money, your restaurant is making money, you take this money, you buy a piece of real estate, and you pay your mortgage, and with the money that is left, now you have infinite money for marketing that you can put in
correct.
that business, and you're growing sustainable. If for any reason COVID comes, a market changes drastically, um, anything happen, you still have the assets that producing you income. So this is so what is your point of view? Because I think that some lack of because of lack of experience,
Sure.
sometimes any business can go well. Yeah, maybe
Mhm.
you get in love with your tech business and it's doing so well, and why you didn't sell your houses to fund the tech business? Why you keep your assets and yeah, you took all the extra money for rent to fund that business, to employ whatever you want to employ or to use for marketing, but you managed to balance out, and this is one of the main reasons that you're very successful and you're a great role model. So, what message do you have for entrepreneurs that still don't understand what kind of risk are we getting into when we
Sure.
go in business? And the business, it might not outlast you. There is only few Apples and Googles and things like that that the business outlast you. They have a cycle, and sometimes people need to come in to grow it, or for anything can change and you can go out of business really easily. So when do you discover that this is the way that you want to plan your entrepreneurial path and how you get inspired for that? By the way, my first business was very similar to you, rent to rent.
Yeah.
I was renting my room and I started to
Yeah.
live it for free. We managed to sell 5 million doing this in London. I'm based in London, by the way, but with
Yeah.
this was my first business, so I totally relate. Um, with what you do. However, sharing this, what I'm telling you, that I open restaurants, I open a lot of businesses. And so where do you got this financial sense that this is how you want to structure your path as serial entrepreneur?
Yeah, so I mean it's a great question because it's something I'm really passionate about because I've seen this happen in a lot of different ways, right? Business goes up, business goes down. For context, I had a residential painting business, right? I sextupled, meaning 6 times that business in the span of one
Wow,
year.
wow,
Um, and that was when I was 18. And so I don't know, I had something in me when I was 18. I don't know what I was eating, but I want to eat more of it now.
wow!
Um,
You were very powerful. My
yeah.
goodness.
And so, but it's to say, from the real estate investor business, like kind of side, exactly to your point, right? If you have that kind of infinite money glitch, if you will, that will always, always help you. And you want to ensure you're investing in real estate in such a way that, you won't have any issues, right? Rent by room will always give you that. Long-term rental will most of the time give you that, right? And then short-term rental kind of depends. Midterm rentals, so think like nurses or insurance or things like that. That also
Hmm.
kind of depends, right? But rent by room will always be there because always people need like one room. And traditionally,
And
a
eventually you will learn. Maybe the
yeah,
first deal
exactly,
is not gonna be right, but it's a skill. The more you practice, the better you become. Eventually you
exactly.
will find something, right?
Yeah, yeah, for sure. And I mean, the other thing too is like buy rent by room and buy other people. Like I've started there was one company I started because of the people who were my roommates, right? And so meaning to say like it doesn't always need to be bad juju or you didn't clean the dishes or things like that. Like it's a matter of again who you are, again acceptance and like creating the environment, right? For that. So it doesn't always need to be like you're living with terrible people, right? As roommates. So as your business is kind of growing and you have unlimited marketing budget because your costs are reduced, right, and expenses are reduced, it's then to say what you're investing in. So I now play in the world of alternative investments. Alternative investments are defined as real estate, oil and gas, debt. Think like a crypto fund. We even have a carbon credit opportunity as well. Meaning to say, like you could invest in a lot of things. You can even invest into fractional ownership of sports teams, right? Now, you'd need capital to be able to do that. So ultimately, the piece is that you want to have a financial advisor or wealth manager that's like helping you through this and thinking through this. Because one thing I've found is that, we just when we do things on our own, we learn a lot, right? I'll say it that way, right? But the main thing that I've found is that between kind of like us making 200 grand and us making 2 million, we tend to not have financial advisors or wealth managers who also build businesses. They just kind of look at the numbers and they're not helping grow your company and helping you with the finances with it. I was frustrated with this, and a couple, other people are too, right? So I created a group called Octane, which is a group specifically for business owners to help them grow their business. And as their business grows, then they're getting education and information from all these different financial type people, right? They're not working directly with them. They're just getting sort of the information they need when they need it. And then they can use that for things. Reason being is I shouldn't go out and just put half of my liquid net worth into some sort of deal, right? That wouldn't be good, right? But 10% of my liquid net worth, absolutely, all day. It's the idea of like bringing family offices, people who have, or kind of groups who have over $100 million in assets. How do they kind of operate and think about finances, and kind of bringing that down? When we're trying to get to kind of that millionaire status, or just like grow our income or grow our company, we tend to take big risks. Those risks can pay off, but also they may not. And so if we spent 3 years like building this nest egg to invest, or our company starts going up and then we start buying the beautiful Porsche, I love Porsches, so that's always my example. Then that's not necessarily going to help the business. Granted, if you do have luxury cars, you tend to get into some of those communities where you can network and things like that. So, my point is just you want to keep your expenses low. One other thing I'll tell you, Harry, is that over the course of when I was in a W-2, like a formal job, I doubled my income in 4 years. And it's because I learned, how to, what skills were needed for additional positions, and constantly applied things like that. Now, that's impressive by all means, but I think the bigger, more important, impressive thing is that I was able to save up to 40% of my gross
Wow.
salary.
Wow.
Now, that matters because if I'm able to save 40% of my gross salary, and I have tax incentives and
Mm-hmm.
ability to take depreciation and reduce my active income and save on taxes, depending on where you live, taxes are like 20 to 30%, right? Whoa, I just made some other big investment, right?
Mm-hmm.
There have been years where I've just made, tens of thousands of dollars. I have to think of the big time, or, sometimes or the biggest amount of taxes I've saved. But my point is that with that income, I also then use that to kind of reinvest, or things like that. So it's the idea of like
Absolutely.
save intentionally to invest. And then as
You
you
can
have the
save tax, and then you invest at the
Exactly.
same
But
time.
but
That's
I'm but I'm
amazing.
focused here, right? Like I'm just focused on the piece. And that's why, there's the big aspect of like human capital and relationship capital, not just investable capital, right? Because I'm able to maybe, experience different things or connect with different people than I otherwise would be able to do. I may not be able to pay $10,000 to get into that room, but maybe I could help volunteer for that group that is full of all the people that I want to be in, right? So my point again is just it's just how we're going about it, who is, there or has done it before, or things like that. But it's like I said, absolutely imperative to have an understanding of like where your main income source is, and then have that to slowly start to diversify in some aspects, but get experience and knowledge from a number of different investments, and then see what's best for you, and then invest in the right way at the right time, instead of just I'm going to keep it in stocks and then be worried about my finances every single day, but I know I have money in the bank, right? Like humans that imagine being like an ape primate, right? We would just be like, oh, I have a bunch of food over there, but we would naturally feel the scarcity. So the ability to have cash flow and other assets really helps our, animal mind, if you will, kind of alleviate some of what our human mind tries to do, right? The animal mind doesn't try to build a tech company or buy real estate, right? The human mind does. So,
Mm-hmm.
absolutely to your point, we want to be able to increase our income in such a way, and then also offset, diversify, tax strategy type pieces, and then have that be a personal sort of investment vehicle. Because I will tell you absolutely this. That every business owner that I know that is personally financially sound, and they, could certainly make more from their business, but they don't have to. They make better and more intentional and longer term decisions, right? Again, the difference between six, seven, and eight-figure earners. If I'm not concerned about seeing a return on investment for 2 years from this, investment, right? Within my company, that is, because I'm financially secure personally and I'm not,
Mm-hmm.
going out and spending all this money or things like that. If you love Porsches, piece of advice, like go rent one for a day, right? Like you can get the same love renting. But it's the aspect of I'm able to make the best decisions for my business, for my employees,
Mm-hmm.
I allow things to come and I learn from them, but I'm not this has to happen in this amount of days or else, right? Because then you're forcing and you're, causing pressure and stress. You're potentially, people are leaving your company. That's not good, right? So the more ability is your responsibility as the business owner to not ensure that the business finances are in check and aligned, but also your personal finances. And if you know this, like you do, and other business owners know too, like your business is a reflection of your personal life. So as you're showing up and being kind and generous and financially sound and things like that, that just transitions into the business too.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.